Hello, hello, and good evening to you all. Welcome to episode 24 of Inspire and Inform. For those that don't know me, my name is Colin Lee, and I'm the founder of Inspire Realty, helping our clients build a better future together. Well, tonight is a special night. In fact, today is actually a very, very special day. I'm sure you would know that today is the 11th of November. But more than that, today is a day where we remember all those that have fallen. So we remember all those souls that have had to make the sacrifice for our benefit and for our sake. But it's also another special day, and I'm not sure how many of you are actually tuned to watch me live. Hopefully you can watch me a little bit later on. But tonight I'll be covering on the shift in the regional areas in terms of property demand and how that's really affecting, investment properties and the overall property market. So I'll be sharing a little bit about that, talking about also something I read in a financial review quite recently about migration and what's going to happen there, but also just to give you a quick snapshot of some of the regional areas that have been quite popular, certainly in the last quarter, and certainly this year when COVID hit as well. But before I do all that, I just want to share with you a story. A number of years ago, I was actually based out in Brisbane. And when I was in Brisbane, by the way, that's a shot of the Sydney Opera House today. I think it's still not too late to head out to the Sydney Opera House to look at the Opera House with the wonderful display of the poppy flowers. But as I was saying, many years ago, I was actually in Brisbane, and when I was in Brisbane, I decided that I would go and watch the State of Origin. I remember at the Suncorp Stadium. I think this is back 3 or 4 years ago, and I'm quite a staunch Blues supporter. And obviously, I knew what I was getting myself into, but I remember going into this massive stadium. I don't know if you can actually see a photo of it, but it was a stadium full of Maroons. And one of my colleagues said, "Are you sure you want to wear your Blues shirt and go into a sea of Maroons?" Well, I tell you what, I certainly felt incredibly intimidated on the night, but I had good fun. I mean, obviously, I've lived in Sydney for many years, and when I was in Queensland, I still watched the State of Origin. But tonight is game 2 of State of Origin, and I'm just hoping and praying, that the Blues will give the Maroons a run for their money, and hopefully we'll have a great game for game 3. But anyway, if you're a Maroons or you're a Blues supporter, all the very best, and may the best team win. But I share that because I lived in Brisbane for a couple of years, and I've really, gotten to know Brisbane quite well. I did a lot of traveling when I was there. I was certainly working in the property industry, so I've got to know quite a lot of the suburbs, made a lot of friends in Brisbane, and I've often wondered of potentially one day even moving to Brisbane. You never know. We'll see where God takes me. I've surrendered to the will of God, and if the right opportunity comes along, I'll certainly be quite open to moving to Brisbane. Most of my investment properties are in Brisbane, Queensland as well. So, I would love to be there to not necessarily to look after them, but certainly see the potential, and I'd love to experience the growth of Queensland. But anyway, it's also another special day. Last week and a little bit ago, if you were in my Inspire and Inform series, which is really there to aim to educate you as investors to make informed decisions about your property investments. But I have never seen this, certainly in my 20 years that I've been in Australia, I have never seen the cash rate as low as 0.1%. Now, I don't know if it'll ever get into negative territory like other parts of the world, but I certainly think that at 0.1%, it's never been cheaper to get a home loan than ever before. So if you're thinking of investing or buying your very first property, I really believe that this is a really good incentive for you. Money is cheap right now. I mean, we're getting rates now below 2%. I'm a finance broker myself, so I'm already seeing banks are starting to pass on the savings, which is 0.15% basis points onto customers. I certainly know a handful of banks that are already talking about rates below 2%. So it's cheap. It's certainly cheap. And as a result of the, I guess, the reduced rates, I mean, obviously, COVID has impacted a lot of people, but quite a lot of us have not necessarily been that heavily impacted by COVID. And what that means is that with the reduced interest rates, you're starting to pile up in your savings. And so I think it's, for a lot of Australians, you're starting to see quite an influx in savings. And I'll show that in the next slide. But I thought I'll just show this to you because it's really quite revealing to me. When you look at this graph, what it basically says is that, hey, if you're a loyal customer with the banks, you are paying easily 0.5 to about nearly 1% sometimes more than what a new customer would get in the interest rates. So I really think you got to be smart with your money, and why pay the banks if you don't have to? So there are two options really. One is to ring your bank to lower the rates. I know certainly for a lot of banks, they may not necessarily always lower the rate, and you can't do it too often. I think every 6 months you can only do it once with the banks. But if you haven't, I think this is a really good idea to ring your bank to negotiate with them for a better rate. Alternatively, which I think is already a really good idea, some banks are offering cashbacks. And I won't name all the banks because they all have varying cashback offers. It varies anywhere from $2,000 to $3,000. But that's a really good incentive for you to consider moving your loans across to a bank that would give you a better rate. Just to give you an idea, refinancing an $850,000 home, which is, below the median price in Sydney. I had a client at 3.27% and we dropped it to 2.19%. And they were saving nearly, certainly over $1,000. It was something like to the tune of $1,030 a month in savings. And they were not able to negotiate with the banks to drop the rate as much as down to 2.19. So I think it's really important if you're thinking about refinancing to either give me a call or touch base with me via an email to discuss about your current situation and explore what we can do to help you save more money so that you can maybe put together that for another rainy day or save up for a deposit for another investment property down the track. So definitely talk to me if it's something that you're keen on looking at. But this is what's happening. So I was looking at the Australian Bureau of Statistics. Actually, this was sent by my very good friend and colleague, Andrew. And he said, Colin, have a look at this. And it's really the household savings ratio. So if you look at the data since 2004, you can see that it's really risen, to 2008 when the GFC kind of hit. So people started to save more money, 10% roughly around that. And then over the years, over the next 10 years, it's really just dropped, as you can see. It just progressively dropped. People were spending more money. But when COVID hit, which is in around June, July, you can see that the household savings ratio really just picked up. It went through the roof because we were all in lockdown. We couldn't spend money. We couldn't go out for a cup of coffee. We couldn't go shopping. We couldn't do the things that we would normally do. So what's happened with the combined with the low interest rate and with the high savings ratio, it's really like a bit of a loaded gun. What that means is that a lot of investors and first home buyers are really starting to get into the market. And certainly as an investor, I really think this is a good time to start to look at some opportunities. The question is where? And so this is where I would really just go through on a very high level what's happening with regional cities and really not to discount that. I never thought I'll ever say this. I guess I've always learned through my years in property. I've always been to seminars and I've listened to mentors and people who have amassed a huge property portfolio. And the message I tend to always get is only invest in cities or in suburbs that's close to the CBD, to the central business district. And there was even an argument that says don't buy too far away. There's some investors that say I wouldn't buy anything that's more than 15 kilometers, 20 kilometers away from the CBD. But what we're seeing now because of COVID is really the trend, really the shift from living close to CBD, which you don't really need to, into more suburban areas and also regional areas. I literally had a client that have said to me, you know what, Colin, I've been working in Sydney. His workplace has been really good, and say, look, you don't need, it's not even an option for you to work from home. Work from home. It's cheaper for the company. Anyway, so they're moving to regional Queensland to settle down with their family, and for the same amount of money, they were able to buy a much bigger opportunity and a better property as well. So we can start to see that happening. Now, this came out last month, and it was only recently that I kind of looked at it again, and I thought, this is really, really interesting. And what it is really, it's talking about the tsunami of the influx of international migration. I remember when I was, 17, 18, and my parents said, guys, let's consider migrating. And we had a few countries. We had New Zealand, believe it or not. We had Canada, but Australia definitely came up. We had two uncles in Australia, so it was an easier choice for us to come to Australia. And I remember, saying, what a lucky family we are to come to Australia, not only to live but now thrive. Like my younger brother and younger sister, my family, they're doing relatively well, considerably, as migrant families in a completely brand new country. So it is the lucky country, and I already know from my many conversations with friends from Malaysia, from Hong Kong, from the Philippines, from Indonesia even. A lot of them are saying that they are very keen to come to Australia, to live in the long term. We've handled a lot of things very well. It is the clean country. It is, Australia gives you a fair go. So I just know that in the next few years, there's going to be a huge influx of international migration, which is ultimately going to be driving up the population of Australia. And before you know it, we're going to be down on our supply for properties again. And that's when we really start to see capital growth in property. I'm not sure if you saw the Westpac presentation on the prediction for property prices, but they were predicting anywhere from 10, 15% to 20% for Brisbane in terms of capital growth between 2022 and 2023. So that's quite an incredible it's incredible. I mean, just to see what's been happening. So really, it's good news for regional areas in Australia. I'm just going to show you very quickly, just to touch very briefly on some of the regional areas that are really shifting. You can see here that for many years, between 2001 and 2019, the red being the regional growth in terms of capital population growth. For a lot of the capital cities, you can see that the population, sometimes it's double of, or even more if you look at Northern Territory. But let's look at New South Wales. The population growth in capital cities are double what it is of regional cities. And we're starting to see the swing back into regional. So I definitely see some good opportunities in regional Australia as well. These are just some of the areas and the median price, looking at inquiries. So obviously I got this from realestate.com, and we're just looking at some of the areas and what's happening with the median price. So you can see that Orange House, the median price is about 445,000. That's apparently one of the top inquiries, followed by Wollongong and then Byron Bay, to no surprise. In Victoria, you can see Mildura, Shepparton, Wodonga. In Queensland, Surfers Paradise, Mooloolaba and Southport. South Australian, Mount Gambier, Port Pirie, Murray Bridge. Western Australia, Dunsborough. South Headland, Cable Beach, Tasmania, Devonport, Georgetown, and West Launceston. So you can see these are all very regional areas, and what it's saying is that the inquiries are starting to pick up in these regional areas, which is quite interesting. So the main beneficiaries of, I guess, the shift in regional areas in Victoria, Geelong, Bendigo, Ballarat, Latrobe, Gippsland has been one of the big beneficiaries, followed by New South Wales, Illawarra, Southern Highlands, Shoalhaven, and Hunter Valley. I know of a number of my investors who are already inquiring about some of those regional areas, potentially to live as well if you could work from home. So that's really interesting. Queensland, Gold Coast, and the Sunshine Coast. Without a doubt, certain suburbs within the Gold Coast and Sunshine Coast have really picked up in those areas. A lot of Sydney-siders are buying some of those areas sight unseen, so that's incredible. And we certainly have a number of opportunities in Gold Coast. So if you're interested in having a chat about that, please let me know, and I'll be keen to share with you a little bit more information about that. I'm not going to talk too much about the more remote regions in Australia, but it's certainly there for you to look at if you want to. Actually, I'll pull this up. There we go. Yeah, so I think I've missed this, but these are just some of the areas, regional areas that have really experienced quite a significant amount of inquiries in real estate quite recently. So that's been quite cool. And not sure if I've showed this, but the point here is that the population growth in regional areas have always been very much under what capital cities would grow at. Some capital cities grow 2 times, 3 times, 4 times what regional areas would grow. And how that affects capital growth is obviously with population, you have jobs, and with that, the inquiries and the demand for those properties will go up, and hence the capital growth. So I'm starting to see there's going to be quite a lot of interest in regional areas for the capital growth in the long term. Certainly with what's happening with COVID, remotely working and working from home has become quite the norm. So it's certainly worth you having a look or keeping an open mind about some of these areas for the long term. Never thought I'll ever say this, actually. Last but not least, these are just some some regional areas that have experienced some growth. I've got 2 graphs here, really, not graphs, but tables here. One is looking at the September 20 median price and just looking at the quarter-on-quarter change. You can see that Grafton, Mid-North Coast, Richmond, Tweed has grown by quite a significant, I mean, these are like, you know, if it continues to go at 8.7, it'll double within 10 years or quicker than that, actually. So this is very high growth rate. Victoria, similarly, Queensland, Townsville, Gold Coast, White Bay. See, Gold Coast has come up once again in terms of regional areas that are growing quite quickly. I'm not going to go into too much of the other areas, but what's really, really interesting to see is the September 2000. So now this is 20 years of data in terms of how properties have grown. And it is incredible. I mean, 20 years to see that the percentage change, you know, with numbers like 1,280 in Bungalow, Fletcher, and Glenroy, all, you know, 800 and 740% growth in the last 20 years. That is a huge amount of growth. Victoria, Queensland. Anyway, you get the message. You know, regional areas are starting to really become areas that are, you know, on the radar of many investors. So it's certainly worth taking a look at that. Hey, I hope you've enjoyed this Inspire and Inform Live. Check us out every Wednesday evening. We normally go live anywhere between 6 to 6:30. Sometimes I need a little bit more time to prep. But hey, if you're interested in having a conversation with myself or any of my team, just go to www.inspirerealty.com. Have a good night and all the best to the Blues, or if you're with the Maroons, all the best with the Maroons. Thank you so much and have a great night. Bye for now.